Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Important second half of the day today. It's the weekly options expiry. We have already come off from the highs. Let's see which way things go.
That's right. Good afternoon, Sonal. And it's a banking pack, a whole host of BFSI updates that came in overnight, and that's keeping the banking space slightly subdued. But we have a lot lined up on the show, some important corporate conversations. So let's start off with the top headlines. Stocks hold steady on hopes of an India-US trade deal after America's Vietnam trade pact. Consumer durables lead the charge while PSU banks drag. Midcaps in line.
M&M Financial reports its Q1 business update, reports a sequential decline in disbursements while assets under management rise. CSB Bank, on the other hand, total deposits and gold loans surge on a YOY basis.
Bajaj project gains after the company bags an order in the range of 300 to 400 crore rupees for a 400 kilovolt transmission line project.
Bazaar-style retail under pressure after reporting their Q1 business update. Standalone revenue surges 37% versus last year. However, same-store sales growth declines 3%.
The stock of FSN e-commerce, promoter of Nykaa, sulks after early investors Harinder Pal Banga and wife Indra Banga sell over 2% equity for nearly 1,200 crore. Fears of further selling is an overhang.
Okay, those are the top headlines, but let's talk about the markets now. The Nifty up 50 points. It has come off from the highs of around 70 points from the highs of the day, has been stable around those levels since 11:30. The Bank Nifty is the one which has come under a bit of pressure, so that index is flat with some negative bias right now, closer to the day's low as well. Mid-caps doing well. The top sectoral gainer is Nifty Auto. We have Nifty IT, which is doing well as well. Nifty Pharma, small cap index is doing well, 0.3% higher over there. But very stock specific in terms of the quarterly updates that we have been getting in. Of course, that had to happen. We are kickstarting Q1 very soon.
Very soon, within next week, we'll all be, we'll have a whole host of results to analyze. A couple of stocks, that's hit the eye. A couple of stocks from the EMS space. The first one is Amber Enterprises. That stock near the day's highest point. And the other one that we don't discuss too often, is PG Electroplast. That is PGEL. That stock almost 3% higher. But in our special segment, Midcap Mover, Hormaz is standing by the wall. He has a whole host of stocks from the broader end of the markets that are moving around in the session.
There's some bit of relief for the broader markets today, especially considering the fact that the advances are outnumbering the declines today, although that line is skewing towards converging again. But for now, we'll start off with the gainers then in the broader markets. And there are some of these names like DCM Shriram, which has surged to the highest point of the day. There was some tax relief announcements that came in yesterday. The stock is up 11.5%. Look at Transrail Lighting, Motilal Oswal. Rate gain at one point was up almost 8 to 9%, still holding on to gains of around 5.5%. Healthcare stocks are doing fairly okay for themselves, be it hospitals, be it pharma. Look at Aster DM, look at Eris Life making new highs. Natco Pharma and Ipca Labs too within the mid-cap pharma space, seeing healthy gains of anywhere between 3 to 4%. The other space that's done well though are the auto ancillary names and the MNC ones in particular. Look at Bosch is up 5, Honeywell Automation is up 5% as well. And look at Motherson Wiring, that's done fairly okay for itself even in today's session, 3.5% higher there as well. Stocks that have done well on the volumes front, have names like Confidence Petroleum, Latent View. KPR Mills was the stock that was supposed to be in the spotlight after the Vietnam deal with the US. So that's up 3.5%, and V-Guard too, seeing gains on healthy volumes. And lastly, stocks that are bucking the trend, at least in the broader markets, not doing fairly well for themselves. Look at Dreamfolks after the post by Adani Airports, its CEO, 5.5% lower. Bazaar-style retail, as you just mentioned. And Nykaa, after the block deal, seeing some choppy moves, and Karur Vysya Bank is down to the lows of the day. Back to you guys.
All right. Thank you so much, Hormaz, for joining us as always and telling us the stocks that are moving around in trade. And with that, remember to tune into the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back to Midcap Radar. Well, India Grid recently announced that it has partnered with IFC to develop a battery energy storage system project in Gujarat. Harsha, who's the managing director at IndiGrid, joins us now to discuss more. Thank you so much, Harsha, for joining us. First up, give us the contours of this particular development. So who are you partnering with in this particular project? Is it under the EnerGrid platform that you had earlier announced with BII? Has the PPA already been announced, and what is the capex commitment from your end?
Thank you for having us. This project is, first of all, it's a BESPA, so Battery Energy Storage Purchase Agreement, which is already signed with GUVNL. This was one of the first large utility scale project. Yes, this project is going to be under EnerGrid, where on equity side, we are partnering with BII and Norfund. And on debt side, IFC, who has been a long-standing partner on the lending side, is also participating. And then they have done a phenomenal structure for us in terms of debt for this project specifically.
Okay, so Harsh, give us some details then. What is the quantum of commitment? Does it come under the BI-backed IndiGrid platform? And is the PPA signed for this one? What would the tariff be?
Yeah, so the agreements are already signed for this. This total commitment is around 460 odd crores of debt facility that IFC have signed, which is around $55 million. IFC with this deal overall lent approximately $380 million to IndiGrid, which is about 3,250 crore, which is one of the largest lender on our books, and also one of the longest debt financier for us. We have up to 17 years of fixed rate loans with IFC or bonds with IFC. And this is incremental such facility, which is concessional in nature to support the project. And that's the tariff for this case is not finalized in terms of rupees per unit, but in terms of rupees, the lakhs per rupees per month megawatt.
That's right, yeah.
So this project was won a year and a half earlier. So this was won at approximately 4,50,000 rupees per megawatt hour per month. That's the tariff for this project.
4,50,000 rupees per megawatt per month, which is the tariff that you have mentioned. Okay, this largely compares in line with recent BESS projects. One worry, what's actually happened is that in the last 6 months, we've seen one project from JSW Energy, which was at a slightly higher tariff, actually getting, not getting the nod from CRC. Any risk to that, given the fact that you just mentioned that this is a project where tariffs were determined some time ago? So that is the first question. The second question is something slightly more structural. Why are you finding the need, or what is the need, which we asked you last time as well, the need to deviate from transmission assets and getting into slightly more capex intensive BESS projects? Will this dilute shareholder returns?
So to answer your first question,
right.
The BESPA is signed for this. GRC has already approved this. In comparison to the JSW project you were referring was approximately, if I'm not wrong, around 10 lakh rupees per megawatt hour per month. Right. Versus this one is less than half. There's also a long time gap between the two, so they're not strictly comparable. But in our case, the GRC has already approved the tariff. The project is started, and we are looking to commission in this financial year as well. So it's pretty advanced stage, so we do not see that a regulatory risk on this project itself. To answer your second question on why IndiGrid is doing this, for us, and IndiGrid is a critical player in energy transition. We think battery energy storage is a crucial requirement for energy transition for India, and it offers a phenomenal opportunities for players like us to build scale early on. And this is one such project where we are showcasing that. The contractual structure of these projects is similar to transmission in terms of take-or-pay, as long as we maintain the availability, which is pretty much similar. So for us, battery energy storage projects are like transmission, or I would say they are transmission projects. Even Ministry of Power, when they have announced the classification of battery energy storage projects, they have clearly identified the utility scale projects which are attached to transmission systems are part of transmission system. So for us, this is just an extension of transmission system, nothing beyond that. In terms of shareholder returns, this is hugely accretive to shareholders because the project was won at a good economics, and we are very well in time to commission these projects. And during the time of the project, we have seen the battery energy prices, battery energy storage price is reduced a bit, which has added the returns for this project.
Okay. Harsh, then tell us about any fundraise plans to expand the AUM going forward in terms of the assets that you want to add in FY26. What is on your radar? You say this one is just an extension of the transmission biz itself. Are there any more such plans that you have in the horizon?
Certainly. We see our business and in three buckets. First is transmission, where we are doing development as well as acquisition. Development happens in EnerGrid platform, where we are targeting over 50,000 crores of projects this year. Wins is not in our control, but we will be looking to bid for these projects. On the acquisition side, we have already acquired one project, which is solar plus transmission from Renew, which put together approximately 2,100 crores of enterprise value this year itself. We just closed it earlier this month. And the third is battery energy storage, where we already have around 900 megawatt hours of projects, and we are looking to expand and bid for more projects. So in all, we are seeing growth in all these three segments. We will look to do both greenfield and brownfield acquisitions in these three segments in this year.
Harsh, very quickly, so are you sticking to the dividend per unit guidance of 16 per unit for FY26? Any upside risk there?
No, I mean, the upside risk, I think is not there. I mean, upside, we have already factored in earlier this year, the 16 rupees a unit guidance, which itself is a almost 9% jump versus last year. We are confident of delivering that. In any case, we only increase DPU when we are very sure of delivering the DPU for next 5 to 7 years, irrespective of new projects coming in or acquiring new projects. So it's a fairly stable prediction that we have done for DPU. On top of it, we are looking at interest rate reduction that is coming in this year. And hopefully with more refinancing coming in, we'll be very, very comfortable delivering our 16 rupees a unit guidance for this year.
Okay. All right, Harsh. Thank you so much for joining in with all those details. With that, we'll slip into a break. With that, here's some good news for our viewers. India's business news leader is now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're still tuned into Midcap Radar. Let's talk about the real estate sector. Latest report by Knight Frank suggests that there was premiumization of residential segment across markets. This is the first half of calendar year 2025. This is their half-yearly report which has come out, and it talks about what's happened in the residential segment as well as the official or the commercial segment as well. Gulam Zia of Knight Frank is joining us now to discuss the same. Gulam, good afternoon. Always pleasure speaking with you. Let's first up talk about the housing market. A 2% decline in overall sales across cities. We've seen that unsold inventory has increased by 4%. Are we at that juncture where the growth would slow down? Or I would say the decline could come about and unsold inventory will keep increasing?
Not really. First of all, let me put across another small data point that you missed mentioning is that in the same period, new launches have also shrunk by about 2%.
Yeah.
So it's not just sales, but new launches. Both have moderated a little. However, the inventory that you're talking about, when you're looking at inventory as just one number, you may look at a particular picture. But when you realize that this inventory has to be seen in perspective of the velocity of sales. So if you look at last 8 quarters of rolling averages, the velocity of sales that we have experienced, continuing with the same velocity, whatever inventory that we are talking about would be absorbed in less than 2 years, which means it's a great healthy market for a developer. So whenever you're talking about inventory, you need to look at how, if suppose tomorrow nobody is launching a new product, how long will existing inventory take to be absorbed? And that's only a 2-year number. And that's something which not many people are talking about, that looking at the velocity of sales, inventory is not that much of a worry. In fact, it's a great number. So overall, what I'm worried about is not so much of an inventory shrinking or rather growing. It's actually a certain segment where we do see some worries coming up, which is 20 to 50 crore of segment, the product size, product ticket size segment is where a little worry is there, where the velocity of sales shoot up to about 4 to 5 odd years. But except for that, everywhere else, any other segment of real estate, at least housing, there is no need to worry at all.
Gulam, you're talking about the 20 to 50 lakh segment, if I'm not mistaken, where
50 crore. Let me correct. 20 to 50 crore segment, the ticket size, that's only segment where you're going to take more than 4 years to absorb the inventory. Understood
that. But you're also talking about how the lower end of the segment, homes below 50% has actually seen a steady decline in sales. What is the reason for that? Do you see that picking up anytime soon? Well, the reason thereof, it's very simple. Every developer is chasing the low-hanging fruits, which is the upper end of the market, luxury. Everything is about luxury. Whichever city you go to, developers are focusing only on the upper segment of the market because A, your margins are far better, and two, your ability to quickly sell and move on is much better. And now let's not forget, if you're selling 100 sub 50 lakh apartments, you may not make as much of profit as somebody like a DLF would sell one apartment of 100 crore or make much more of that. So please understand, this is economics, and developers have realized that it is a quick product, fast moving product in the upper end, margins are higher. So the lower end we've seen a mass exodus from the lower end of the market. Most of the developers have actually moved out from lower end and shifted to mid to upper end. And that's a worry. As you rightly said, not just the new inventories, but even the sales. Actually, what used to be 2/3 of your overall pie, below 50 lakh apartments sold, say about pre-COVID, used to be 2/3 of the market. Today, it has shrunk to less than 1/3. Actually, just barely about 1/4 of the overall market is that segment. So your question is valid. Huge worry. Whenever the lower end of the market bounces back, for want of inventory, we shall not see good traction in that segment.
Got it. So, we usually just discuss the residential space, but so much is happening in the office space as well, right, Gulam? What would your key takeaways be from the first 6 months? Do you think this is something we can replicate or maybe do better than that in the second half as well?
Well, just to sound very, very, a little worried about the excessive growth. What we have seen is almost about 50 million, about 48.9 odd million square feet of space absorbed in the first 6 months of this calendar year. That's unbelievable. And a few markets, like of course, Bengaluru has always been the leader on the top. This year, the first half yearly, they have done 18.2 million square feet of transaction, which is what they did in the last whole of calendar year. More than that is only in 6 months. So what my worry is that these numbers are fabulous. So if you, and typically every year we have been observing that the H2 always does more of office transactions than H1. Here the H1 itself is absolute earth shattering. So what would H2 be is a big worry. And even if you are moderating it, we would still see more than 85 to 90 odd million square feet of office transaction in this calendar year, which will be far better than this about 71 that we did last year. But the problem here is slightly different. Not enough of inventory is coming up. Not enough of new office stock is coming up. Because again, most of the developers have actually moved to focusing on residential. They're making super premium houses and making their quick profits. Office sector is not getting enough of inventory. So the year has been fabulous, but the worry is hanging that not enough of inventory is going to cause a huge concern in times to come.
Gulam, very, very interesting insights. So most of the developers have actually shifted to the premium housing, and both residential housing as well as commercial is seeing a bit of a dip as far as inventory or new inventory coming in. Thank you so much, Gulam, for joining in, giving us your view as far as the entire residential as far as the housing market is concerned. Well, time for a quick market check. Have a look at a name like UPL. This particular agrochem name was under quite a bit of pressure whole of last week. But what's actually transpired is that this particular week, the stock has done extremely well for itself. In fact, if you pull up, as you can see, the 14-day chart, almost 9% higher as far as UPL is concerned. But with that quick chart check, it's time to take your leave on this edition of Mid Cap Radar Mutual Fund Corner when we return.